Hey everyone, my name is Jack. Welcome back to the channel. This marks another episode of my M1 Finance portfolio series where I'm trying to build a $100,000 portfolio in this platform, M1 Finance. It's a free to use platform. I've got all sorts of content about it on this channel, including a whole tutorial series, which I always include in the description below if you want to check it out. I also have an affiliate link down there if you want to sign up. If you end up funding your account, I might get a small commission, which would definitely help the channel out a lot. And if you want to see all the exact holdings or just copy this portfolio for yourself, it's not financial advice by any means, but if you want to adjust this portfolio as you see fit, add holdings to it, remove holdings, whatever it happens to be, if you have an M1 Finance account, you can actually do that using the link I include in every single M1 Finance video in the description below. You can copy that portfolio over. It's a nice little feature that M1 Finance offers. But I crossed a very big milestone last month. This portfolio just crossed $50,000 in invested funds. I had some cash sitting on the sidelines, so now that was finally invested since I saw some opportunities that I wanted to take advantage of, and I'll go over those in just a second. But it's been great to see the progress the portfolio's made. I've been adding new money to it throughout all this time, and we're well on our way to that $100,000 goal. Of course, a market crash could wipe out so much of this progress in a matter of seconds, but that's the game we're playing. But if we go on over to my value slice here, this is generally speaking my higher conviction stocks that I'm trying to get at a really good price. That's why I bought into them, and they typically make up a disproportionate amount of the portfolio just on a single holding basis. So this is where I'm putting a lot of my time and energy into actually researching stocks and trying to find those good businesses at great prices. A position I started last month was Dropbox, where I added about $1,000 into it, and I've since added quite a bit more since it actually fell immediately after I bought it for last month's episode. It fell about 10%, so I added a good bit there, so my cost basis is now just under $26 right here, average price per share. So I added up to a position of about $3,500, and it still has yet to fully recover, but they just had their earnings, which we can see if we head on over to Ticker Terminal. You can see Dropbox's price history over the last year, but more importantly, I want to see what the business is doing. So we take a look at the income statement. You can see the revenues is this line right here, and going chronologically to the left. So this is the most recent earnings call from the first quarter of this year. And you can see revenues are up from last quarter, and they've been going continuously up over the last few years, which is fantastic to see. But revenue is not the whole picture, because you could easily just blow up expenses to raise revenue, but their profit has been growing too, which is even more important. It's great to see that they're on this nice upward trend. I'm looking for businesses that can produce steady cash flows for the long term, continuously grow them. That's exactly what you want in a business, because ultimately, if a business isn't producing cash flow for the long term, you're not going to get anything in the long term. They have to eventually produce the cash flows that you're predicting out into the future based on the current share price. That's what a share price is, after all. You're buying a portion of the business, and you're saying that I need it to hit these particular projections. It needs to make this amount of profit so that I can get a bunch of dividends, so that I can get more capital appreciation sometime in the future. And depending on what investors want, that number can vary widely in the near term, since there's lots of emotion in the short term that can dramatically change people's expectations, among many other things. But that's what a stock price is really representing. It's your future expectations for the business. Or maybe not your future expectations, but the market's broader future expectations. And I would definitely argue that they're not always accurate. So I'm looking for those inaccuracies where they're more in my favor, and I have a bullish view on that business for the long term that's more bullish than what the market might be thinking right now. And that happens quite a bit. It's hard to find them at times, but there's so much volatility in the stock market that often you'll see prices drop very quickly below a price target that you might have for it, and then you buy in, and then suddenly it recovers shortly thereafter with no explanation for as to why it actually dropped in the first place. That's how crazy the stock market can be. We saw that actually recently. I did a recent video about Bill Ackman buying into Domino's, where it dropped down to $3.30 per share very quickly for about a week or two, and now it's back up well over 400, and they bought in around $3.30. Pershing Square Holdings did. So you see these very quick price movements can be your short window to actually invest in something, and you never really know where it's going to go in the short term. And it was kind of a tangent, but that's the point. I was just trying to say what a stock price really is representing. So I think that Dropbox is going to continue growing in the long term. It's hard to say exactly, so you discount it appropriately with a discounted cash flow, as I've done a few times on this series. But it's great to see that the business is continuing to do well, and we'll see how it does in future quarters. So that's Dropbox, which had its recent earnings call. It's continuing to do well, so that's great. I might buy in a little bit more, maybe not at this price, but if it drops again, I definitely will be buying more in. And hopefully Dropbox just refers to the actual brand name, not the actual stock price, but we'll see what happens there. The other big big change that's happened recently in my portfolio is Equity Commonwealth, which I've done some more content on the channel as well. Sam Zell announced that big merger that Equity Commonwealth is going to do with Monmouth Real Estate, assuming the merger actually goes through, of course. Monmouth Real Estate is a large industrial REIT. So that's big news. Go check out the breakdown I have on that whole deal. I did a very detailed breakdown on the actual Monmouth portfolio and the merger structure itself. So I'll include that in the description below. But I did add a little bit into this position, seeing as though it dropped down to my original cost basis. And my cost basis was really based on the cash value of Equity Commonwealth's giant cash hoard. So I ended up buying about $2,000 more. It's my largest position in this portfolio right now. So that's really the only change I've made there. We have to see this merger actually go through first, but it's interesting to see that Sam Zell wanted to preserve the cash pile. The long story short of it is that Equity Commonwealth and Monmouth Real Estate are doing an all-stock transaction, so Monmouth shareholders are going to get some portion of new Equity Commonwealth shares, and that means that Equity Commonwealth will preserve its $3 billion or so in cash to continue doing other deals in the future. I think this is just kind of the starter deal to maybe build up a little bit of a base of the portfolio beyond just the couple office buildings they have right now, and that's my guess. I'll actually be doing a breakdown very soon over on Karan Gurnani's channel, talking more about this deal beyond what I've already covered on my channel. So very interesting deal, since it's not really one that was very expected from Sam Zell, the grave dancer. You'd expect him to go for more distressed real estate, distressed assets that he can add value to. Instead, they did the industrial route, and shareholders weren't particularly happy with it. You see this dip right here before I added more. It actually dipped quite a bit when the merger was announced, since shareholders clearly didn't like the fact that he was going into industrial, at least at this price or something like that. But I'm optimistic, so I have not sold out yet. If we get new details, maybe I will, but so far the picture hasn't changed all that much. It's still a ton of cash. They're getting a great portfolio out of it. Maybe it's a little bit overpriced, but I imagine that Sam Zell would be keen to sell off overpriced assets that even if he just bought them, to get that cash back and continue building this massive cash hoard. So we'll see what happens there, but that's what I did with this Equity Commonwealth holding, added a little bit of money there. And the last holding in this value slice that I want to highlight is this SPAC here, Pershing Square Tontine Holdings. I hesitate to call it a true value play, since I'm technically paying a premium for the cash value of this SPAC, but I invested in this quite a long time ago, and I think this holding at one point was up about 30%. I probably should have sold there, seeing as though it's just a cash entity. It's a SPAC trying to find a big company to merge with, and that's a huge premium just for this cash vehicle to pay. Probably should have sold out there. There's a lot of uncertainty with SPACs right now, but this one seems to be getting close to merger, which I'm going to go over in just a second. But this is the holding I have there. It's only a couple grand, so in the grand scheme of my whole portfolio, not a very big position. But there's some news around this SPAC that Bill Ackman, Pershing Square's founder, just shared. This was at the Wall Street Journal's Future of Everything event, where Ackman came on, talked about a number of things. I already talked about the Domino's acquisition that Pershing Square made, but this is actually talking about the SPAC merger that is potentially in the works for Pershing Square right now. They're apparently getting pretty close. Here's what Ackman had to say.
And I would say I'm cautiously optimistic. I'll have something people are excited about within a reasonable period of time.
Can you just explain
I don't like give a precise look. When I made a comment, I think in November or so, November or December, I said my expectation was we should be in a position to identify a target and announce the transaction by the end of the first quarter. That was my estimate.
Mm-hmm. And what happened? Is it partly because asset prices are going up so much? Has that been part of the challenge?
No. I would say I'll give you a little more information. We've been working on a transaction since early November. Same transaction. A lot of complexity. And I think we're either going to get a transaction done in the next relative short term, weeks, or we'll be on to the next one. But obviously it was sufficiently attractive and interesting. It was worth devoting 6 months of our energy to.
Do you think it will involve other investors, like other big institutional investors? Is that part of the complexity?
No.
Okay, just Pershing.
There are big institutional investors in our SPAC, but just the nature of the target, the issues we're solving for them principally have made the timing longer than we would like. But we think it's worth the energy and the effort.
So that's the slightly cryptic update that Ackman gave about Pershing Square Tontine Holdings, this SPAC. They're apparently getting close, so they've been working on one deal for 6 months, which would make you think that they're probably pretty confident they're actually going to get something done. Just want to make sure that everything is in line, that everything's okay. He said the complexity was more on the other team's side. And there's some speculation that it might be Bloomberg, the large news outlet, since I think there are partnership structures that might be adding to the complexity, and you got to appease certain partners or something like that. I don't know what they're dealing with. This is all speculation. I don't know what it actually is, but that seems to be a common rumor right now that it might be Bloomberg, since it's going to be a big company. That's pretty much all we can guarantee, is they are going for a large company. A large unicorn was one of the main targets for Ackman and the Pershing Square Tontine Holdings SPAC search, but we'll see what it actually is. But it sounds like we could get something in the next few weeks if Ackman's hunch is correct, that they're actually that close to a deal. Then again, he said that there was going to be something in the first quarter, and we did not get that. So a couple months later, maybe, okay, he's a little bit late, but we'll see what actually happens. The fact of the matter is the SPAC price has fallen far below its actual recent high, and it's down to about $24 a share, or $25 a share. And $24 per share is where Pershing Square gets its warrants triggered. So Pershing Square, the hedge fund, has these warrants in Pershing Square Tontine Holdings, the SPAC. So that's a key price to look out for any Pershing Square Holdings shareholders like myself. I do own it outside of this M1 Finance portfolio, since M1 does not actually have the over-the-counter stocks available to it at the moment, and Pershing Square Holdings is technically a foreign stock. But that kind of rounds out the value portfolio updates. I haven't added anything to Turtle Beach. It's been hovering around that $30, $25 to $30 price range. If it falls well below 25, I'd probably start adding to this again, unless we get some new news, some fundamental change. But that one's been hovering around there. But if we head on back to the main portfolio and take a look here at metals, this has actually surged quite a bit recently. We've seen copper go absolutely crazy. Uranium has done great. Silver is still up, mainly from the summer where it went kind of crazy. And my gold mining holdings are starting to come back quite a bit. They got pretty low for a while. Same with the gold holdings. I was kind of buying near the high in the summer, and they seem to be recovering a bit. These aren't holdings I'm really trying to stick with for the very long term. This is more to have some inflation protection, since that is a huge concern right now. We have inflation that's currently here, and then also on the horizon with all the money printing that the government's doing to finance all sorts of stuff. So I want to have some insulation there from inflation. I want to be protected somewhat, at least. Of course, there's downside risk with any sort of investment that includes commodities of any sort. Could easily go down, but I wanted to have some sort of upside as well, rather than watch all my cash be eaten away at inflation. And if I see a better opportunity, I will sell these quickly. That includes any of my value holdings. I could easily pivot some of this metals money into value. That is not something I would hesitate to do if I needed the cash or liquidity to do it. But that's pretty much all I wanted to cover today. I'll continue adding more money to this portfolio, and I'll be updating you along the way every 15th of the month, so be sure to subscribe so you don't miss any of those updates. And I also put out other videos beyond just the stock market. I talk quite a bit about real estate investing as well, as that's something near and dear to my heart and my portfolio. So be sure to subscribe for that as well, and be sure to hit that like button if you got value out of this video, if you enjoyed it, if you found it entertaining, whatever floats your boat. If you like this video, definitely like it, since that would help the channel out a lot. And like I mentioned, you can check out M1 Finance in the description below. I got my tutorial series there, as well as an affiliate link to the actual platform. It's a great free brokerage. I highly recommend checking it out if you're based in the US, as it's not available beyond the US yet, unfortunately, but it is a nice brokerage, and I've had a really great experience with it thus far. But until next time, take care.